With sterling looking like it wants to punch to new lows for 2017, I thought I would look at price action for the pound against the dollar and also against the euro. But first of all, some context. Clearly, Article 50 has been a drag on sterling ever since the referendum vote back in June last year. But is there now more certainty with the move that Parliament has agreed to allow the government to go ahead with the trigger? Yes, the googly has come from Scotland with its call for a referendum, but the chart is showing a sign that a bottom is forming. Let's look first of all at sterling against the US dollar. On the basis that we're at lows not seen since January, is now the time to start buying. Let's look first of all at the weekly chart here for sterling against the US dollar. I thought first of all, look at the long-term picture here. Bearing in mind this is the weekly, this goes back to 2005, 2004, but look at the price action that we've seen since the highs back on July 2014. Now, in the last, 4 or 5 months or so, we've got this pattern here where we got new lower highs, but at the bottom here, we've got what could be a base forming. And indeed, if you look at the RSI and also the MACD down here, you've got what is bullish divergence. It means that these are pointing up at a time when price action is pointing down on the chart itself. Let's take a look in some more detail about what's happening here. And you can see clearly here, despite the fact we got this drop, we've also got new higher lows that we've seen struck since that low back in September last year. That's the weekly chart. Let's look at the daily chart to get some more analysis of what's going on here. And you can see that low that we got there back in October last year of 118, the figure on that flash crash low. We tried to break down. We got a new low there printed on the 15th of January, and that was at 119.87. And today's trade, you can see here, we've not quite hit that, but the price action looking potentially that it might hit that at some point. Let's look at the hourly chart to get us a better idea as to where this is moving. And you can see now the consolidation after hitting that low of 121.06, the pullback at 121.31. Now, is the time now to be buying sterling? Clearly, we're not out of the woods yet, as we have yet to receive a start date for the trigger of Article 50. I'm looking forward to seeing price action at that point. So that's the position we're at the moment. I don't think necessarily it's the right time to go long sterling, but I do want to see whether or not we see a break of certainly, first of all, the 119.87. If it succeeds in bouncing off that again, that could well be a trigger to start going long. If you do go long, you want to put a stop loss here at the 118 level. If it breaks down to here and you think it's going to go continuation of the short trade, you would want to put a stop at the break there at around about the 120 level and then take it all the way down to 118. If it breaks that, you're then at lows not seen in some 33 years. Let's take a look at the other aspect of this, and the way the spread is going between the buys and the sells, between sterling against the US dollar and sterling against the euro. You can see here that the spread of trades on the IG platform is to go long. And this is the temptation, I think, for a lot as we see sterling doing this bottoming out trade. Let's take a look at sterling against the euro. Similar sort of picture. You can see these higher lows performing here, and indeed exactly the same thing. We haven't yet hit that low of 112.96 in today's trade. We're at 114, the number on this daily chart, but we do have the similar sort of price action reflected in the MACD and also the relative strength index, indicating potentially lower lows. But at the moment, at least, this is holding up. But if we do get a print below 112.96, you can then look to seeing this chart go on down to about the 110.50 level potentially. If you're trading a short trade, you really want to be putting a stop just above where we are at the moment at that 114 level. You don't want to get caught the wrong side of this because you could see a big snapback. The one final thing I would say is that, of course, 6 o'clock on Wednesday evening, the US Fed brings us what is widely expected to be an interest rate rise. But half an hour later, we'll get the press conference, and that could well indicate the Fed's intentions for the rest of this year. Will it go on a more aggressive rate increasing path, which could see the dollar push up further, which may provide us for more weakness and more short trades for sterling?